What's up? Welcome back to Prime FX. Today, I want to teach you a very reliable pattern that I found out that is working for Crash and Boom, especially Crash. It works for Crash 200, 500, and Crash 1000. Okay, so this pattern is not that's a hard one. It's not a hard one. It's very easy to spot on the chart. So I will be cheating my phone. I'm going to cheat my phone so that it can be more visible to you so that I can explain better because I cannot explain it while my phone is in this kind of mode. Okay, so I will have to take my phone now. Yeah, okay. So I've got to understand that crash and boom often range a lot. Like I don't know if this is the case of other markets too, but understand that crash and boom range a lot. By the way, what I mean by a range is when you have a trending market, maybe making lower lows and lower high, lower lows and lower high, and all of a sudden you see the market doing something like this. This is called range or consolidation, anyone you want to call it. But there is a way we can take advantage of this whole range here and make money from it. Okay, so that is what I want to teach you in this video. Okay, I'm going to teach you other patterns too, but let's dive into it. Okay, so I've marked out a few of them that have worked out, just a few of them, so that you can understand. I will show you those examples of how these patterns work out. Okay, now we have this. We have a fallen triangle here. We have a fallen triangle here. You can see it. This is a fallen triangle. So as you can see, we are in a downtrend. Okay, the market is moving lower. Okay, and all of a sudden we started making some kind of higher highs and higher lows. As you can see, started making higher low, higher high, higher low. So we failed to make another higher high here. Then it started going back down again. Okay, so and it didn't go down very much and it didn't go up, like started ranging in this shape. Okay, as you can see, there is less bullish momentum and less bearish momentum. Okay, so what you do is you mark out this, you mark it out. Okay, because this is a sign that the market will go up. This is a bullish signal. Okay, not bearish. You expect a breakout from the upside. Okay, so you mark it out. At least you have at least three touches. Okay, have at least three touches when you are marking this out. Yes, three touches. We have first touch here. We barely have a touch here. We have another touch here. And we have this little touch. Okay. So you mark it out and you wait for a breakout and a retest, which is what happened here. You can see it. It's clear here. We got a breakout and a retest. Then boom, the market went up. Okay. This is the bullish sign. Okay. So that's the first example. And we have this one too. This is a kind of a wedge, kind of a falling wedge, or will I call it a rectangle? Okay, but you can see the market started ranging in this kind of rectangle shape. Okay, so it started ranging here, and what happened? We have our three touches: first touch, second touch, third touch. Barely touched it here. Then we got a breakout. If you go to the lower time frame, you find out that there is a retest here because I'm currently on the 1 hour time frame. Okay, when you see that retest on the lower time frame, maybe the 15 minutes time frame, you go short, you sell. Okay, and then we have this. Now we have a rising wedge. Okay, let me, don't know, this thing is covering my phone. Okay, it's covering the screen. Okay, you can see it here. We have a rising wedge. I hope this is clear to you. We have a rising, let me zoom in back. Okay, you can see what I'm trying to show you. We have a rising wedge. Okay, where we are making less of the higher highs and higher lows. As you can see, market is going up, but not with strong bullish momentum. This is a sign of bullish weakness. This is a sign that the market wants to go low, but you are not sure yet. Then you wait for a breakout. Okay, and make sure you have your three touches. One, two, three. We have our three touches here. I mean here. We have them here. Then what happened? We got a breakout, a very strong breakout. Most of the times, the market will break out and continue going lower without retesting. But in this case, we had a retest, but this retest took a long time to come. Maybe if you're a patient one, you can wait for it. Then we have a retest here. Then we head lower. Okay, as you can see, market went lower from that time. Okay, this is the third or fourth example I'm showing here. There are many of them, but I can't share now. This is a clear wedge, rising wedge, clear one. Okay, this is a clear rising wedge. Though we are in a downtrend, the overall trend is bearish, but we had this rising wedge here where the market tried to make higher highs and higher lows, higher highs and higher lows, but eventually we got a breakout. Okay, you mark it out with your touches 1, 2, 3. When you mark it out, you wait for a breakout and a retest. But in this case, we did not get a retest. That's why I said most of the times the market will break out and continue going lower. So we got a breakout. Breakout traders will take the trade and go short. Okay. But if you miss that one, there's nothing bad there. You wait for another opportunity. Okay. So this is the pattern. Very simple. So we have this one too. This one is a little rising wedge, but not that much. Doesn't have much momentum, but you can still mark it out. Okay, you can still mark it out. We have your first touch, second touch, and the third touch here before the breakout and the retest. There's this little green candle here is a retest. If you go to the lower time frame, the 15 minute time frame, you understand that you find out that this is a retest. Okay, so when you get that, you go short. Okay, it's very simple. Crash and boom they don't clearly make higher highs and higher lows just like that. That's what I found out. So they make this range, they create these patterns for us to follow. If you can follow them clean, if you can follow them properly, you make money with them. Okay, so we have another one here. As you can see, it's repeating itself several times. So we got another one here. You can see the market was said like all it is okay. Okay, try to shift the trend from bearish. No, we are coming down from this point. We are going low from this point. We are coming down. Then the market tried to make bullish. Try to create higher highs and higher lows, which it did, but wasn't enough to change the trend. Okay, it did change the trend though, but you mark it out. You mark that range out. This is a range, kind of a range, but it is rising. Okay, so you mark it out, then you wait for the breakout and retest, and this is exactly what happened. We got a breakout and we got a retest, then the market started going low. So if you take this trade from here, place a stop loss above here, you can get a nice 1:2 risk to reward ratio. Okay, so this is basically the pattern. Yeah, we have another one here. This one is it's kind of much. Okay, so this is a range, this is a clear range. Okay, we have a clean range here. Now when we have a range, you can either buy at support and sell at resistance. Anyone you want, you can do that. But for me, I would wait for the breakout, because trading range is very risky. Okay, because you don't know what will happen next. You can buy here expecting price to get to this point, and what happened to break out. So it is very risky to trade range. So I don't trade ranges. Okay, so what happened here? We got a fakey. This is called fakey, a fake breakout, and it went back up immediately before finally breaking out and reversed. And retested. Then we headed lower. We went lower. Okay, so this is just a pattern. It is very simple to spot. Just find a range or triangle. Just mark out your trend lines. Get at least 3 touches before you can place the trade. Okay, yes, that is it. Okay, so what about the entries and the exits? Okay, so I want to tell you about the entries and exits. Okay, so you can do 1:2, 1:3, 1:1.4, anyone you want, but I usually go for 1:2. Okay, when you get your retest, example here, when you get your retest, get some bullish momentum candlesticks, you can enter for the trade and place your stop loss below. Okay, place your stop loss below the zone. Okay, you can place it below the zone and your take profit anywhere you want. 1:2, 1:1.4, 1:3. It is good, but I usually go for 1:2. Okay, 1:2 have worked quite often, so you can go for 1:2. Yes, that's it about the entries and the exits. Okay, so when you get your retest, then get some bullish momentum candlesticks, enter, place a stop loss above the last higher low or the last lower low. Then you take profit times two of that. Okay, or times three, anyone you want, you can do that. Okay, so that is it. So I want to show you a live trade that I placed with this pattern. Okay, I want to show you a live trade I placed with this pattern. So this is a live trade I placed on this is crash 500. Okay, it's crash 500. Yes, I saw this falling wage. Okay, so I marked out. I had three touches. You can see I have my three touches. One, two, and the third touch. So I entered a little bit late. So I got the breakout and the retest. I got the breakout here. I got the retest, but I wasn't around with my phone that time. So I entered pretty late, but I know that the market will still go up. Okay, the market will still go up. Yeah, I know that the market will go up. At least it will hit the next resistance zone. Now I'm trading on a small account. That's why I'm using a zero point 0.1 lot size. I open two positions, so I'm expecting this trade to go well. This is a live trade I placed using that pattern. Okay, so this is to show you that that pattern is reliable. Okay, so you can use this pattern and make money for yourself. Okay, hope this video is helpful for you. If you have any questions, you can drop them in the comment section. I'll attend to them once I see them. Okay, thank you for watching and thank you for saying through. Have a nice trading week.